So since our last video on crude oil, it looks like it did break out of that downtrend. We did fill this gap here all the way up to $40. And now crude oil is up about 300% or so since the April lows, with a nice, clean, steady recovery. We are at a strong resistance level, and that $40 range will probably get tested twice or so until we flip it into support, because right above that is the 200-day moving average. The RSI and MACD are showing that a correction is happening right now, and there will be potential for a break above $40 once the MACD goes bullish again, and when the RSI settles back down to 50 or even below. The 200-day moving average is right around $43, $44. So we can expect some choppy price action before a clean breakout. But keep in mind, there is an increase in COVID cases around the world, and it's still possible for that second wave that everybody's talking about to come. It's still a big impact on the global economy. I will jump back into this, but right now let's go over some of the key support and resistance levels. So we'll jump back in the currency platform in a minute here. But first, let's cover some of the support and resistance levels. So the first level that we're going to want to watch is right around $36, which is right below the 21-day moving average. And that also has been the bottom for June so far. The next support level after that would be right around $33, which was a high for May and also a major resistance level before we filled that $40 gap. $28 would be a critical level for the bulls to hold, because if that breaks, then we could possibly see crude oil back down to $20 or even lower than that. As for the clean recovery so far, the $40 range has been tested, but it also right now currently is rejected. It was a low for crude oil in 2018, which was the last V-shaped recovery. So right now we do see that as a pretty hard resistance level, and it is right on the 200-day moving average. And if that $40 range becomes a support level, then I would expect a clean run up to $50, which would then be the next resistance level. $50 is a psychological resistance level and is kind of where the price has been ranging for the past 5 years. So the first headline we want to cover here for crude oil is JP Morgan thinks it's still possible for 190 oil after the pandemic, even though it does sound crazy. It was just in early March that JP Morgan Chase warned that crude oil could be entering a super cycle that could send it up to $190 a barrel by 2025. But within weeks later, coronavirus pandemic set off a collapse in oil prices, brought the demand down, but they're still doubling down on their long-term bullish outlook. U.S. crude futures went below zero for the first time ever in April. It did bottom out at about negative $40 a barrel, but in response, the US, China, and Saudi Arabia, the three largest producers, have agreed to cut down on production. Did help bring the life of oil prices back. JP Morgan still thinks that a bullish oil supercycle is still on the horizon, since a huge amount of the oil supply has been put offline. So with the price starting to stable out at this $40 range and starting to consolidate, it does seem like $40 is the new normal for crude oil. As of right now, oil prices are set to range around the $40 mark for the near future, because there's not too much downside risk for it to move much higher since this whole recovery. Iraq seems to have the next move, waiting to move forward and see how their plan will go in the OPEC deal. But if other OPEC plus countries fail to comply, or a second wave of lockdowns and the demand of oil slows down again, then we can expect a nosedive. It would be pretty hard for crude oil to go negative again. That did seem like a once in a lifetime buy to dip opportunity. And right now what we need is more production cuts and a demand to continue rising so we can get back to bullish prices above $50. So the question now could be, what's next for oil prices? With oil prices rallying right up to that $40 mark, analysts now are starting to come out with their bullish forecasts similar to what JP Morgan Chase has said. There's still lots of risk remaining, and the current recovery seems to have hit a resistance zone. But keep in mind, we are approaching that 200-day moving average, so a rejection is expected for the first time to break out of that. I will be talking a little bit more about that later in the video, so stay tuned. But in the short term, hedge funds have sold off their bullish bets for oil when it came around that $40 mark. And it seems that most investors are really cautious about the recent recovery, since they did see how volatile oil can be. One co-founder of an American oil company told Bloomberg that you can't see demand ramping up every week, Countries are starting to go out of lockdowns, but cases of COVID-19 are still increasing. But most countries will probably not go into another strict lockdown again. But if cases does seem to increase, we can see a delay in the recovery for crude oil. The markets did seem oversold when a lot of that panic first came in, but this recovery happening right now, that can help settle a little bit of the realities. So now let's jump into platform and come up with our bullish and bearish outlook for 2020. So here on the daily chart, the price has been bouncing off the 21-day EMA since it crossed over in the beginning of May. Now we are at a strong resistance level, and the support for the 21-day EMA is getting weaker. In the near future, we can expect a drop down to this 50-day EMA. It would be the first time testing it since it crossed over in the middle of May. And right now, I still see the trend bullish as long as the price does not close below both of these moving averages or break the support levels that I mentioned earlier. Testing that 50-day EMA would bring oil down about another 7%, which does seem realistic, especially with more COVID cases on the rise, and also the demand possibly taking another halt. Overall, the price does seem to have bottomed out for the year. We had a breakout to about $41, and now it's time for possible flip that 200-day moving average into a support for a possible bull run for the remainder of the year. In the long-term history, crude oil has been in a downtrend, so I do not see the price closing above the yearly open, which was around $61. My bullish outlook for crude oil for this year is right around $55, since seeing that is the range that the price stayed at in majority of 2019. And it's also where the 200-day moving average stayed around. So I do expect that as a strong resistance level on the long term. And if we continue to recover, that is the price range that I expect some choppy price action to keep happening until the next major global event happens to shift the price in an upwards trend or a downwards trend. If you look on the weekly chart, the $50 to $55 range has been a major support level since the beginning of 2018. What I see happening if price continues to recover, once we hit the 200 moving average on the weekly chart, then we can have some sideways price action for a few months going into 2021. For a bearish outlook for 2020, I can see the COVID cases continuing to increase and more fear coming into the markets again. My bottom price range would then be right around $20, unless we get a worst case scenario where we have a huge wave of COVID-19 cases with millions of new cases and deaths. But other than that, my bearish price target, $20, bullish, $55. Both are pretty realistic based on the outcome of COVID-19 and a demand for oil, and if the price continues to recover. So that's it for now for oil. Let me know in the comments if you think it's going to continue a recovery, or are we due for another nosedive with COVID cases on the rise? I'll see you next time. Don't forget, hit that like button. It's John from Currency.com. For more trading videos just like this, please subscribe to our channel.